Now, there's always been questions about how much free market exposure, how much of a free market is or are the exchanges in China. The government definitely has some control over the exchanges. There are safety, they call them, what do they call them? Shock absorbers, safety brakes built in that if prices drop below a certain level, if there's too much selling, that these breakers kick in and they actually halt all the trading. And so there is a lot of government influence on the behavior of the stock market, which ultimately affects price. The reports that are coming out from the international media are that the Chinese Securities Regulatory Commission, which is the regulators of the securities industry, that they've been urging mutual fund managers not to sell shares unless faced with investor redemptions. So if you're a mutual fund manager and you're managing a fund and you would normally sell off non-performing securities that are in that fund, and it would be based on your mathematical models and your investment policies and procedures and your investment models, which you by law have to disclose to your clients and which the clients agree to when they sign on. The Securities Exchange Commission of China, the Securities Regulatory Commission, is now telling you to violate your own procedures, do not sell unless specifically asked to sell by a customer. That raises so many questions, and that, along with issues with the currency and how much influence the government has on the price of the currency and how much influence they have on the market, it certainly raises the question, just how free are these markets? Should these be considered free markets? Should Chinese firms be allowed to list on the New York Stock Exchange and foreign exchanges? Should we be investing on these exchanges where the government has so much control over the price and over the movements of stocks, when they're being sold, when they're being bought? So I am a qualitative economist, not a quantitative economist. So there are people that will actually do the modeling, the mathematics that go along with these questions. But I certainly see this as a question, and this needs to be addressed. And I think that structurally, when we look at the trade war and we look at the issues in the phase one versus the phase two trade agreements with China, we start realizing that the problems in the Chinese economy are structural. Nearly 30% of the whole economy is the state-owned enterprises. You have state-owned enterprises that act on behalf of the government. They don't necessarily have to turn a profit. They may be driven by behavior other than profit, which then means they're not exactly free market, right? They're not behaving according to the market, and it means that they're unpredictable. It means that it's very difficult to compete with them because they can take loans and not pay them back, or they could behave in ways that cause them to have a loss economically, but that loss then benefits some other sector of the economy, which is dependent on those state-owned enterprises. So the coronavirus, the trade war, the phase one, phase two trade deals, I think all are calling into question now individual questions that economists have had for the last 10, 20 years about just how much of a market economy is the Chinese economy, and should we be treating it that way, and should we be allowing China to participate in WHO, the WTO, international agreements, particularly if they're not adhering by the laws and rules and norms of those organizations, if they're skirting the rules. Should they be listing on the New York Stock Exchange if we know that the company is largely state-owned or state-controlled, if they're refusing to open up their books for audits? I think all these things are coming to a head now. And I would never predicted that the coronavirus would be one of the things that is driving a closer economic scrutiny of China and their behavior in international markets. But it's very interesting, and I think that we're going to see a much closer scrutiny now, deeper investigations. We're going to see more reports from more think tanks, more economists, more quantitative economists that are going to come out and say that they're going to prove mathematically, or they're going to attempt to demonstrate mathematically or make a case mathematically that China is not abiding by the rules and should not be part of these international systems.